Hey everyone, welcome back. We're doing a deep dive today into how Warren Buffett picks companies that will win over the long term.
Mm.
And as a guide, we'll be using Chapter 7 of The Warren Buffett Way by Robert G. Hagstrom.
Excellent choice.
Yeah, this book is a great way to understand Buffett's thinking, and I think anyone can benefit from it.
Oh, absolutely. Even if you're not a Wall Street wizard.
Right, exactly. So let's jump right in.
Okay.
So Buffett, he's not like the average investor who's always chasing the next hot stock tip.
You say that again.
He's in it for the long haul.
Yeah, he's looking for those businesses that he can hold for years or even decades.
And it all comes down to understanding a company's true earning power
Mm-hmm.
and how well management uses its resources.
Right.
You know, one thing that really surprised me is that Buffett isn't a fan of earnings per share.
Yeah, a lot of people fixate on that number.
Yeah, you always hear about it in the news.
But Buffett sees it as a bit of a misleading metric.
Really?
Yeah, he prefers to focus on return on equity.
Return on equity or ROE? Okay, so what's wrong with earnings per share then?
Well, earnings per share can be easily manipulated through accounting tricks.
I see.
So ROE, it cuts through all that noise and tells you how much profit a company generates for every dollar that shareholders have invested.
So it's a much better indicator of a company's efficiency.
Exactly.
You're not just looking at the profit itself, but you're looking at the profit relative to the resources the company is using to make that profit.
That's the key.
That makes sense.
And to get an even clearer picture,
Okay.
Buffett adjusts ROE calculations.
How so?
Well, for one thing, he values marketable securities at their original cost,
Oh, interesting.
not their current market value.
So you avoid those distortions caused by the ups and downs of the market.
Precisely. He also excludes unusual items from the calculations. This helps isolate the core business performance.
So it's all about seeing how well the underlying business is actually doing.
That's the idea.
Now let's talk about owner earnings.
Okay.
This concept I found really intriguing.
Just a go.
It seems like a much more comprehensive way to look at cash flow than what's traditionally used.
It is because with owner earnings, you're forced to think like an owner of the business, not just an investor glancing at a balance sheet.
Okay, I like that. So how does it work?
Well, you start with the company's net income.
Okay.
Then you add back depreciation and amortization.
Okay.
But here's the key.
Uh-huh.
You subtract the essential capital expenditures that are needed to maintain the business.
Okay, so those are the expenses you absolutely have to make to keep the business running.
Right. Like if you owned a bakery,
Hi.
your net income would be the money you make selling bread and pastries.
Uh-huh.
But owner earnings would factor in the cost of replacing your ovens, mixers, and other equipment that you need to keep baking.
That's a great analogy. So owner earnings give you a more realistic view of the actual cash flow after all those necessary reinvestments are taken care of.
Exactly.
So we've talked about ROE and owner earnings.
Yes,
Another key factor in Buffett's framework is profit margins.
absolutely.
He really admires companies that have high profit margins.
It's a sign of efficient cost management.
Right. It's like the old saying, a penny saved is a penny earned.
Exactly. The more profit you can make from every dollar of sales, the better.
But doesn't that sometimes come at the expense of quality?
That's a good question. And it's where Buffett's judgment comes in.
Okay.
He's not saying you should cut costs recklessly. It's about finding a balance,
Right.
being prudent and efficient without sacrificing the long-term health of the business.
He often highlights examples like Carl Reichardt and Paul Haythen at Wells Fargo.
Oh, yeah.
Leaders who were relentless about cutting unnecessary expenses.
While maintaining a strong company culture.
Right. So it sounds like he admires a lean and efficient operation, but not one that's cutting corners or jeopardizing its future.
Exactly.
Now, I'm curious about how he actually measures whether management is using those profits effectively. The book mentions something called the $1 premise.
Oh, yes.
What's that all about?
It's a simple but powerful rule.
Okay.
But Buffett believes that for every dollar a company keeps, it should add at least $1 to its market value.
So if they're doing their job right, the company should be growing, and that growth should be reflected in a higher stock price over the long term.
That's the general idea, but remember, the market can be irrational in the short term.
Oh, right, of course.
So this premise isn't about day-to-day fluctuations. It's a long-term assessment,
Okay.
and it forces you to look beyond those temporary market swings and focus on the sustainable value creation.
Okay, that makes a lot of sense.
Buffett also has a healthy skepticism of anything that might distort the true financial picture of a company.
Yeah, The book mentioned that he's wary of accounting gimmicks
He's always on the lookout for those.
because he understands that financial statements can be manipulated.
Oh, yeah, they can be made to look a lot better than reality.
Right. So for those of us who aren't financial experts, what's the takeaway here? Do we need to become accounting whizzes to avoid being misled?
You don't have to be an accountant, but you do need to think critically. Don't just accept numbers at face value.
Right.
Question assumptions. Dig deeper and try to understand the true story behind those numbers.
And remember, these principles aren't just for investors.
That's an important point.
They can be applied to any business, even your own finances.
Absolutely. Whether you're looking at a business, a potential investment, or even your own personal budget, understanding these principles can give you a huge advantage.
It's about becoming more financially literate and empowered to make those smart decisions in all areas of life.
Exactly.
That's a great point. So this isn't just about picking stocks.
No, it's not.
It's about understanding the fundamentals of sound business and using those principles to make better financial decisions in all parts of life.
Exactly.
It's really amazing how Buffett can take all these complicated financial ideas and turn them into something so clear and easy to use.
He really has a gift for that, cutting through all the noise and getting to the heart of what matters.
Yeah. And one of the things he really stresses is cost management.
Absolutely crucial.
We talked about profit margins, but I'd love to hear more about how Buffett approaches controlling costs.
Sure.
The book mentions Katharine Graham, the former publisher of the Washington Post, as a great example of this cost-conscious way of thinking.
Oh, yes. A fantastic example.
What's the story there?
Well, back in the early 70s,
Okay.
the Washington Post was dealing with rising production costs,
I see.
mostly because of union wages. Graham knew this couldn't go on.
Yeah.
So she took a really strong stance during contract negotiations.
So she wasn't afraid to push back against the unions.
Not at all. She understood that tough choices had to be made
Right.
to keep the paper running smoothly.
Yeah, to balance the needs of the employees with the financial health of the whole operation.
Exactly. She brought in some really skilled negotiators, and she held her ground.
What was the result of that?
It was amazing. Within 5 years,
Wow.
the Washington Post's profit margins had jumped by something like 80%.
80%.
Yeah, it was a remarkable turnaround.
So it wasn't just about being tough. It was a strategic move that ended up benefiting everyone.
Absolutely. It saved the paper.
Wow, what a powerful example of how managing costs the right way can really make or break a business.
It really is.
Reminds me of what Buffett said about those guys at Wells Fargo, attacking costs even when their profits were through the roof.
Yeah, always looking for ways to improve efficiency.
Never getting complacent even when things are going great.
That's the mark of a truly great company.
It's interesting how the book uses Coca-Cola and the Washington Post to illustrate Buffett's principles.
Yeah.
They seem like totally different businesses. You know, one's in consumer goods and the other's in media.
True, but what they both have is strong leadership.
Right.
Leaders who understood and used the things Buffett values.
Like focusing on high returns on equity,
Exactly.
managing costs well,
Yep.
and reinvesting profits wisely.
Those principles work no matter what industry you're in.
It's not about what you're selling, but how you run the business.
Right. It's about having those core principles of financial smarts and efficiency in place.
That's what makes Buffett's approach so timeless.
Mm-hmm.
It can be applied to all kinds of businesses.
And even to our personal lives.
So we've covered a lot of ground here, from ROE and owner earnings to profit margins,
Yes.
the $1 premise, and the importance of managing costs.
It's a lot to take in.
What would you say is the key takeaway for our listeners?
I'd say it's about shifting your focus away from chasing those quick profits.
Okay.
And instead focusing on creating value over the long term.
So tuning out the market hype
Exactly.
and really getting to know what drives a business's success.
It's like learning to see past the smoke and mirrors and get to the real story behind the numbers.
Becoming more aware and informed about finances.
Yes. And don't be afraid to ask questions and do your own digging.
Don't just follow the crowd.
Right.
Make your own decisions based on what you learn. Develop that financial literacy.
And remember, these principles aren't just for big-time investors. They can be applied to so many areas of life.
Like what?
Well, let's say you're thinking about switching jobs.
Okay.
You could use these ideas to see how healthy the company is financially and what their long-term prospects look like.
That's a great point. It's not just about picking stocks. It's about making smart choices with your money, no matter what you're doing.
Exactly. And if you're thinking about starting your own business, understanding things like ROE and profit margins and managing costs, well, could make all the difference.
It all comes back to being financially savvy.
Yes.
and making choices that help you reach your goals,
In the long run.
both in your career and your personal life.
This deep dive has really been about giving you the tools and knowledge you need to handle the financial world with confidence.
We've uncovered some of those really valuable insights from Warren Buffett.
And looked at how to put them into practice.
I gotta say, I feel a lot more prepared to analyze businesses now
Good.
and to make smarter choices about money.
That's what we were hoping for.
Ready to look at things with a fresh perspective.
Excellent. Just remember, it's a journey.
Yeah.
Keep learning. Keep asking questions.
And keep improving those money skills.
You never know what opportunities might be out there.
Now, before we wrap things up, I want to go back to something we mentioned before.
Okay.
Buffett's skepticism of accounting gimmicks.
Oh, yeah.
Why is that so important to him?
It all comes down to his belief in honesty and transparency in business. He wants to see the real numbers.
Not some cooked-up version?
Right. He wants to make decisions based on the truth.
So it's about seeing through those illusions and getting to the real story behind the financials.
Exactly. And that takes some healthy skepticism.
And a willingness to dig deeper.
We need to be smart about the information we're getting.
Especially these days when there's so much of it out there. They
Exactly.
have to be like financial detectives putting the pieces together.
That's a great way to think about it.
It can save you a lot of trouble down the road.
It really can. Remember, knowledge is power.
Yeah. And the more you learn, the better you'll be at navigating the world of finance.
It's worth the effort.
Okay, so to sum up what we've learned from Warren Buffett today,
Mm-hmm.
it's all about focusing on return on equity owner earnings, profit margins, and the $1 premise.
Those are the key elements of his investment strategy.
And the keys to finding companies that will do well over the long term.
We've also seen how important it is to manage costs carefully.
Right.
Be wary of those accounting tricks.
And to be committed to transparency in business.
These are the ingredients that go into building successful and sustainable companies.
But maybe the biggest lesson here is the shift in mindset.
Yeah.
It's about thinking like an owner, not just an investor.
Taking responsibility for your financial well-being.
Being financially literate, asking questions.
And always working towards creating real value.
Yeah, it's like he's giving us this secret code to understand the financial world. We're not just looking at numbers anymore. We're seeing the whole story.
Yeah, you're getting to the heart of the business.
Its health, its potential.
And like any skill, the more you use this framework, the easier it gets.
You start to see things differently.
You're speaking the language of business.
Makes you wonder how many great opportunities we might have missed because we weren't thinking this way before.
It happens, but hey, it's never too late to start.
Right.
Even if we don't all become the next Warren Buffett,
Yeah,
these insights can be so helpful in our own lives.
absolutely. Like, let's say you're trying to decide between a couple of job offers.
Okay.
You could use these principles to check out the financial health of those companies
See which one's got the stronger foundation.
and what their long-term prospects are.
Exactly. So it's not just about playing the stock market.
It's about being smart with your money in every part of your life.
Thinking like an owner, wherever you are.
Like maybe you're thinking about starting your own business,
Okay.
understanding ROE, profit margins, cost management. That
Yeah.
could be the make or break factor.
It really could. These principles are universal. They apply whether you're looking at a giant company or your own personal finances
It all comes back to being financially smart
and making choices that line up with your long-term goals.
for your career and your personal life.
So we've covered a lot in this deep dive.
We have
We've given you the tools and the knowledge you need to navigate the world of finance
uncovered some of those golden nuggets of wisdom from Warren Buffett.
and explored how to use them in different situations.
I have to say, I feel a lot more confident about analyzing businesses now
That's great to hear.
and making smarter choices about money.
Remember, it's a journey.
Mm-hmm.
Keep learning, keep asking questions, never stop trying to improve your financial skills.
And who knows? Maybe we'll all find some hidden gems along the way.
You never know.
Well, that's all the time we have for today.
Okay.
Thanks for joining us on this deep dive into the mind of Warren Buffett.
It's been a pleasure.
We hope you found it as insightful and empowering as we did.
Until next time, keep exploring, keep learning, and keep on diving deep.